Welcome back, everybody, to another episode of the Dental Boardroom Podcast. You know, one of the biggest mistakes I see dental practice owners make isn't in the treatment room. It's actually in how they manage their financial planning rhythm. And too often, owners treat planning as a one-time event instead of what it really is, an ongoing cycle. Think of your business and personal finances like a patient, and you give them care. You don't just clean a patient's teeth once and call it done. You schedule them 6 months, a year, you monitor, you adjust. Financial planning works the same way. So today, I want to talk you through the recurring sequence of activities every practice owner should build in their calendar. How often should you revisit your business plan? How often should you update your cash flow forecast? When should you sit down for a tax strategy review? And even how often you should reassess your personal risk tolerance in your investments. By putting these on a deliberate cycle, you create financial hygiene that's just as critical as clinical hygiene in your practice. So, as you know, up to this point, we've covered the 4 phases of financial planning for a dental practice. And each of these phases sort of has some subsections to them, but the main phases are to organize your team, your strategic team, number 1. Number 2, complete a personal financial plan for financial independence. Number 3, complete a business financial plan that supports your personal plan. And now number 4, implement, monitor, revise, and repeat. That is the substance of today. What does the cadence of activities and meetings look like so that you are maximizing the rate of financial independence? All right, let's go ahead and show these. Here's a little grid that I've got. And if you're watching on YouTube, again, you can see this. For those not, I will narrate it. On the screen, I show a column for each month of the year. And then the rows are the following activities. These are financial planning activities. Number 1, reviewing your financial statements in your practice. This is your profit and loss. This is your balance sheet. If you're with Practice CFO, we do a CFO analysis every month that dives deeper into your economics and breaks down into each category like labor or collections or operating income, cash balance, debt payments, that kind of thing. So review these. That's number 1, review financials. Number 2, update your long-term financial plan. This is where you go back to the whiteboard and you say, okay, previously we had wanted to retire at age 63 and have X amount for living, yada, yada. And how often do you go back to that whiteboard and update that based on changes to your life and changes to your desired future? So that's updating your long-term personal financial plan. And then there is updating your personal spending plan. How often do you revisit your budget on how much you need to spend? And then number 4 is to complete a tax projection. Number 5, how often do you update your family payroll? How often do you change your own payroll structure for you and, if on payroll, your spouse and kids? Then we have, what is this, number 1, 2, 3, 4, 5, 6 is updating, the doctor payroll. So I actually have 2 here. Updating the family payroll. How often do you do that? And how often do you update the doctor payroll? And then lastly, complete a cash flow forecast or projection and allocate surplus capital. So in the last couple episodes, I talked about this financial forecast. This is where the rubber meets the road and you get traction in your financial planning progress. Is that financial planning forecast? Because then you make critical clinical decisions around what to do with your dollar in order to grow your personal wealth.
Are you looking to buy or sell a dental practice? If you're a seller, how do you find a strong list of potential buyers? There's no MLS or Zillow for dental practice sales. In such a fragmented market, many dentists selling their practice feel discouraged. That's why I built PracticeOrbit.com. PracticeOrbit is modernizing how dental practices are bought and sold. It's a platform technology. Y'all know them: Zillow, Airbnb, Uber, and OpenTable, just to name a few. These technologies do 2 things. First, they help match buyers and sellers by centralizing the marketplace. Second, once the match between buyer and seller is made, these technologies help them navigate the sale to a successful close. Here are a few of the features inside of PracticeOrbit. Users can determine a reasonable sale price for a practice in just minutes. All they need is the most recent business tax return. Practice owners can use the directory to find important service providers like practice brokers, attorneys, accountants, and bankers. Practice owners and their brokers can invite those service providers into the platform, so all parties are coordinating the sale together. Practice owners will have a beautiful digital listing of their practice, like a home on Redfin. And importantly, the listing will be anonymous, and personal information like your address, name, and pictures are only released after an NDA is signed and approved by you or your broker. Practice buyers can create saved searches to be auto-notified when new listings come on the platform that fit their desired specialty and location. And hey, dental practice brokers, you can list all your practices on the site for free. By doing so, you'll get access to Practice Orbit's large pool of buyers, all of whom have created profiles and saved searches to be auto-notified when new listings come for sale. You can use the platform to introduce your listings to a targeted set of buyers. Additionally, and optionally, you can use the platform tools such as a built-in NDA, a customizable LOI, and a workflow tool to navigate the sale from LOI to closing. In fact, you can manage all your listings on the system from listing the practice to NDA to LOI and finally to closing the deal. Create your free account today at www.practiceorbit.com.
So how often are you doing that cash flow forecast and allocating out your surplus to different financial planning strategies? All right, so those are the 7 different items that I have on here that are inside of this sort of process of financial planning for a dental practice owner. How often do you do these, and how often do you do them with somebody who is helping coach you? Now, in my case, it's with the CFO advisor. And here at Practice CFO, we have, I think, 10 CFO advisors who are meeting every day with our clients. They're doing the clinical planning around this whole process. In these past 10, 11 episodes I've done here on financial planning for a dentist, they are making sure that it's happening, that it's being regularly revisited, and that all action items coming out of meetings are executed properly. So that's what the CFO advisor does. Maybe you can get your tax CPA. You're gonna have to direct them a little bit, and because I don't think most CPAs are gonna be doing this stuff out of their own free will. They're not really designed to do forecasting and future planning. They're designed to do historical data gathering and give you a financial statement and file a tax return. So it is a sort of a unique type of person that does this type of financial planning specifically for a dental practice owner. All right, so the first one, reviewing your financial statements, that is done every month. So as you go across the page, there's literally an X under each month column. So January X, February X, March X. Every month you should be reviewing your financial statements. Now, here at Practice CFO, as you know, we have a report that targets certain goals, and these reports will show you whether or not you achieved those goals. So review those, ask questions. What doesn't look right? Ask us, ask your CPA when something does not look right. Be an informed reviewer, an informed reader of these financial statements. And in time, the more you do it, the more it becomes natural and the more you become versed financially. The rest of them, I had doing that with a financial advisor, specifically a financial advisor who can speak the language of dental cash flow in a dental practice, who speaks the language of dental tax planning, who speaks the language of dental 401k planning and structuring your payroll W-2 to be a specific way for specific outcomes. Most financial planners are very generic. They're going to tell you how much you need to save every month in order to retire at a given date. They'll plan Social Security income. They'll plan inflation rates of return on your investment, all that stuff. But that's very, very standard. The real financial planning, where you get traction and actually create surplus cash that you then invest for growth, is by going deep into the business cash flows. That's a very specific type of financial planning service. And so what we do at Practice CFO with our CFO advisors is in these other areas, doing the long-term financial plan update, updating the personal spending plan, completing a tax projection, updating the doctor and family payroll, and completing a cash flow projection. That's what essentially we're using our tools to do. You come into the office or we do a virtual meeting, And we revisit each of these and have the discussion. What's going on in your practice? You have eyes into things that we don't. What's happening with your labor, your team? What's happening with your building and renovations and equipment and your schedule and your hygiene and all of that? What's happening? We need you to inform us that, and then we can bake that in to our financial forecast, and then we can sort of make all of these decisions very precisely. So how often do you update your long-term financial plan? So this is the plan where you're looking out in the future of your life and you're defining your life. How often do you revisit that? I recommend once a year. And I like that to be in the first quarter. Now on the page here that I'm displaying, it's in January, where you say, okay, it's a new year. What's changed in my life? What's changed in my perception of me, my relationship to myself, and what I want out of life? And what do I want that's going to have a dollar sign attached to it or a cost? What do I want for my kids' education? Has that changed? What do the goals I want for my life or my spouse and I? What are our goals together? And just revisit that once a year. By doing that, you're becoming very intentional about the way you live your life. And that's where financial planning for your life is very much an aspect of life planning in general. So I would say once a year to update your long-term personal life plan / financial plan. All right, on to the next one. How often should you update your personal spending plan? Meaning, how often do you go through and sort of add up how much you're spending in the different areas in your personal life? Just do that budget. It might take an hour or two. It shouldn't take that long. But I think it's a good idea to do that once a year to really understand. So if I say, how much do you spend personally? You should be able to know that answer fairly precisely. It gets a little tricky when you're a business owner because some of your personal expenses you're running through the business and whatnot. But you should be able to have a pretty good handle on what that number is. And I tell you, people get it wrong typically by up to 50% all the time. Oh yeah, Wes, I spend $10,000 a month. In reality, they're spending $14,000 a month. We tend to underestimate our spending. Okay, so I think it's a good idea to do that once a year. Now, if you're with Practice CFO, pretty much every time we meet, I'm asking you, what do you need in your personal checking account every month to live? And every few months or so, or every year or so, a client will say, "Hey, Wes, that 10,000 you've been depositing twice a month, it's actually too much, or that 5,000 twice a month isn't enough." And then we adjust it. And if we adjust it, let's say I add another 3,000 a month, then I have to tell you in my financial forecast, what does this mean? Does this mean we have to fund less into our IRA or 401k? Does this mean we have less to save for that second house? Does this mean we have less for this and that? Yeah, something's going to give when you need to spend $3,000 more a month, and your taxes might go up because of that. Because now we may not be able to fund our tax deductible 401k as much due to that consequence. So there's an interrelationship happening across these different variables in your financial ecosystem. Okay, so update that personal spending plan once a year. Next one, complete a tax plan. How often should you complete a tax plan? I recommend completing a tax plan once in June and once in the last quarter of the year, preferably October. November is okay. December is getting a little tight. And here's why. In order to do a good tax projection, you usually need the tax return from the prior year done because that's your starting point. Because then what we do is we say what variations are going to occur this year compared to last year. And then we determine what is the tax effect of those variations. So assuming there's no big change in tax law, now we did just have some a tax bill roll out, the one big beautiful tax bill, which by and large kept the tax code as is. So in a way, it prevented the tax code from reverting back to its pre-2017 tax rates, which was a little bit higher, and it kept them at that lower rate. And so in many ways, this tax bill essentially perpetuated the status quo. So as long as there's no big tax code change from year to year, tax planning is fairly straightforward once we have your prior year tax return done. And so we try to get as many tax returns as we can done on their original due dates, which is March 15th for corporates and April 15th for the individual. However, given we only have about 5 weeks to do those corporate returns, it's really difficult to get them all done. But that said, we do our best. And then by June, let's say we have most of our clients' corps done by June and they're personal. Now, June or July, we can do a really good tax plan. We have two things. We have the prior year tax return done, and we have enough data in the current year, namely 5 or 6 months of financial statements, in order to project out what your tax liability is trending toward. And now with those two things in place, we can now make adjustments to your tax withholdings on your W-2 in order to meet your tax obligations. And we can also start doing our tax strategies that I talked about in my last episode. And then, so you do that in June, you adjust how much you're paying the IRS with each payroll, or if you do quarterly payments, how much you're paying quarterly. And then in October, November, you have now another 3, 4, 5 months of data on your financial statements to revisit your tax plan and say, are we on track with what we thought back in June? And if you ended up collecting a lot more, or your expenses were lower, we may need to withhold a little bit more in taxes for the remaining month or two, and vice versa. If you're collecting less, we can lower the amount of taxes that you're paying. But the key thing is that we are adjusting as we go. We are adjusting as we go. We're not waiting until April 15th after the year is over to do our tax planning, because by then it's too late. And that's when you get hit with the surprises, and then you detest your CPA, at least for that moment, because you owe 20, 30, 40, 50, 80 grand in taxes unexpectedly. But if you do a tax projection in June or October, around those dates, twice a year, you shouldn't be hit with any surprises. Unless you didn't pay the tax estimated payments or adjust your payroll tax withholdings out of your W-2 that your CPA or advisor told you to do. If you didn't do what they told you to do, well, then that's on you. But assuming you do, you shouldn't owe anything unless you just have a really ineffective CPA or financial advisor doing this tax projection.
Do you ever feel lost in your practice finances? And how about your personal finances? Ever wonder where your hard-earned money goes and why you're not seeing the financial progress you worked so hard for? If so, listen up. As a dental CPA and financial planner, I've created our company, Practice CFO, just for you. With almost 2 decades of experience, Practice CFO integrates great CPA services like accounting and tax with customized financial planning, both business and personal. Think of it this way. Our dental-focused CPA services give us the x-rays we need to clinically plan your global finances and be effective financial planners. It's a highly customized approach we call the CFO model. Historically, having a CFO or chief financial officer was an advantage of large corporations only. But today, Practice CFO gives that same advantage to private dental practice owners. As a client of Practice CFO, you'll be assigned one of our dedicated CFO advisors. You'll receive insightful financial reports each month, have regular financial review meetings, reduce taxes, grow your wealth, and feel more in charge of your numbers. Because we believe that in the competitive landscape of dental practice ownership today, you have to be an effective business owner, not just a capable clinician. Reach out to learn more at www.practicecfo.com.
All right, let's go on to the next one. How often do you have to update family payroll? Well, to be honest, if your kids and spouse are on payroll just to maximize the tax deductions and to fund the 401k for the spouse, then you can get that set up in January and then just fix it, and you don't need to change it for the rest of the year. Because by January, you know what the tax code is around 401k contributions and the standard deduction. You know what you need to in order to set up the family payroll that's your kids and spouse. And then you just set it and forget it for the rest of the year. And then you revisit that in January of the next year. Sometimes I'll even do the full payment in one pay period, knock it out, then it's done. And you don't pay that $1.50 per deposit per paycheck. You know what I mean? If you really want to get efficient. But it looks more legitimate if they're paid evenly throughout all pay periods of the year. It looks more legitimate to the IRS. So update the family payroll really once a year is all that's needed. Now the doctor payroll, that's different. Come January, everything that is phased out on your payroll deductions resets in January. I'm talking about your Social Security, which is the big one, which phases out at somewhere around 100. We're 2025 right now. I think it's around 170,000 plus or minus. Once you hit 170,000 in W-2 for a year, let's say you're in October and you hit it, and your total comp is 230 for the year. Anything above that, roughly 170, isn't subject to the 12.4% FICA tax or Social Security tax, which is 6.2 employer, 6.2 employee. And so if your payroll is fixed every month, as soon as you hit that 170,000 for the year of W-2, your very next payroll, you're going to see a net deposit increase. You're going to see a larger amount deposited in your personal account from payroll. You're going to see that larger deposit occur because it didn't have the Social Security withheld out of it. And that's a beautiful thing. Some states have like state disability income that has to be, or insurance that has to be deducted. That phases out. Different states have different things that are phased out. But in January, everything resets. And so that's why if you adjusted your payroll in the last quarter of the year after you hit the Social Security target, in order to get your fixed budget, and let's say your budget's $15,000 a month for living expenses, come January, that $15,000 is going to drop to like $13,200 because the FICA tax and all the things that are phased out kick back in, and now you have to actually pay those again. So in January, I like to do an update to the doctor's the doctor's payroll. And here at Practice CFO, our December, early January is so busy getting all of our doctors' payrolls set up so that we're starting off the year right based on an initial early forecast for the new year for tax withholdings, tax deductions, 401k contributions, that kind of thing. Kids on payroll, spouse on payroll. Then, as the year goes on, in those same months that we like to do the tax update, we like to do the cash flow projection and update the doctor's payroll. So that's June and October, roughly. That's when we like to update the doctor's payroll based on how the year is actually panning out. And then the last item, complete a cash flow projection and allocate surplus. So that's that critical activity of forecasting your cash flows and then making clinical decisions about what to do with your money. That is also the same months as your tax projection and updating your doctor payroll. Those three things happen collectively at the same time. You do a cash flow projection. It allows you to do a tax projection. You analyze those two things in relation to each other, and then you structure the owner's payroll for the right amount of tax withholdings, the right 401k withholdings, the right net deposit for personal living, and the right gross W-2 in order to maximize that 401k or defined benefit plan contribution, which is a function of your gross W-2. So there's a lot of elements that are tethered into structuring your payroll. You got to do a cash flow forecast one, out of that a tax flow forecast, then you revisit the cash flow forecast to update it with the tax forecast, and then you structure the doctor's payroll to make sure that all of these obligations are being met effectively. And so I have this as a PDF. I'll see if I can get it added to the show notes. You can set it, lock it in your calendar, and do these things every month. Review the financial statements once a year, long-term financial plan. Once a year, update your personal spending budget. Once a year, update your family payroll. And then multiple times a year in January, June, and October, update the doctor's payroll. And in June and October, do the cash flow forecast and the tax projection. And really, what is the business financial planning? Doing that in January, June, and October is the best scenario. That is the cadence, everybody. If you do this cadence, I guarantee you, your financial hygiene is going to be remarkably clean. And those financial teeth, so to speak, they are going to do the job. You are going to get financially independent way faster by a significant magnitude faster than your average dentist who isn't doing these things, because this creates clarity of the pathway. It creates accountability. It creates good decision making, and it does it on a regular, systematic basis. And that right there moves the needle every week, every month, every year. And it's amazing how fast a good dentist that's cash flowing well in their practice can become financially independent and create so much flexibility to live the life that they want. And with that, that concludes the financial planning for a dental practice owner, turning financial chaos into financial freedom. This is a This is a process, everybody. This isn't a product. It's not a one-time solution. It's not a quick fix. This is behavior. It's habits. It's systematic. It's reporting. It's activity. It's meeting with your advisor. It is a fluid, living thing. Do that, and you will look back 10, 15, 20 years, and you will be so grateful for yourself for putting forth that effort to do this type of financial hygiene and defining your life. It's a beautiful thing. Thanks, everybody, for listening to this extended series on dental financial planning for a practice owner. Going forward, we've got many other great topics coming ahead for you in the Dental Boardroom podcast. Stay tuned. Until next time.